Ghana's Securities Exchange Commission and the Ghana Stock Exchange have given the World Bank's private sector arm, the IFC, the approval for its $1 billion local bond program. Nii Soa, the Director General at Securities Exchange Commission, in Ghana, joins us now for more on the bond issuance and other activities in the pipeline. Nii, thank you so much for making the time to join us. We know that the bonds are going to be sold to both domestic and international investors. Can you talk us through what this bond means for the Ghanaian market?
The IFC intends to raise that kind of money over a 10-year period in Ghana on our local market. We at the SEC has given our consent. In fact, the operating word is consent. We have given our consent to the IFC to go ahead to prepare a prospectus for the local bonds issue. It is only when they have brought us a final prospectus that is going to be used to issue the local bonds that we will go to the approval stage. So for now, it is our consent. Both the SEC and the Ghana Stock Exchange has given the IFC our consent that they should go ahead and prepare the local prospectus for the issue of the bonds. We believe that is a good thing to happen in our market for IFC to raise bonds on the local market to finance their on-lending activities in the country.
Of course, those are very positive developments. But if we look at the regulatory framework, we know that the Securities Exchange has embarked on an amendment of the securities industry's law. Nii, talk to us a little bit about the key amendments that the Securities Exchange is hoping to confirm.
Well, some of the key things that we are taking up in the law, which is now in a bill form. One of them is the markets or the regulation of other operators, including the commodities exchange. You realize that Ghana is working to establish a commodity exchange to ensure that we can help our Greek sector in terms of marketing their produce. So commodity exchange is one of the key things that is coming on. The other operators that are coming under our regulations, including hedge funds, private equity funds, venture capital funds. We believe these funds, when they are properly regulated, they are a key source of financing for the private sector, which we all believe is the engine of growth. Other things that we are looking at are even the introduction of derivative products to encourage the issue of derivative products. We are also looking at issues like margin trading, securities lending and borrowing. We are also looking at sharing information with other regulators around the world, which is a serious thing for IOSCO, that your rules and your laws, you allow for exchange of information and assistance. We provide assistance to other regulators to be able to work seriously on cross-border issues to make sure that the international capital market is properly regulated. So there are these are some a few things. Again, and I think that we will also look at even the restrictions that we have placed on the mutual funds, which included their inability to invest fully in real estate, that we are going to lift to make sure that the real estate sector also can develop. So these are some of the few things that we are taking on board.
Very quickly, Nii, if we look at real estate investment and in particular real estate investment trusts, what incentives do you think are likely to come through the Ghanaian market to get investors to participate in these trusts?
We in Ghana here, we have what we call the collective investment schemes, which is made up of unit trusts and mutual funds. In fact, the real estate, we in Ghana, we are not talking about real estate trusts. We are talking about real estate investment funds, because our policy is to encourage real estate funds instead of trusts. We want to encourage the funds which are companies which have shares, so that they are listed on the stock exchange. They will not be open-ended funds. They will be closed-end funds listed on the stock exchange, so that when you have bought into it and you want to sell your shares, you don't go to the manager as we have in open-ended funds, so that the manager who has taken the money to develop the housing would have your money all the time, and you will deal on the stock exchange. So we are doing that, and it will come under our collective investment schemes, where we have incentives for both the scheme and the investor. Under our laws, collective investment schemes do not pay taxes on their incomes. So if the collective investment scheme, which in this case will be the real estate investment fund, invests in any project and it gets profit, the law does not require it to pay taxes on its income. Then when the scheme is also paying dividend to shareholders, in the dividend in the hands of the shareholders, also under our law, are not taxable. So once the income to the fund will not be taxed, again, the income to the investor will also not be taxed. If you go to the local, the other ordinary shares, you are going to pay 8% withholding tax on your dividend. But people who invest in real estate investment funds will not pay that tax.